Welcome to Subramani. Yesterday, a friend asked me whether he could gift his mutual fund to his daughter. Uh, Now, any asset that you hold, you should be able to do anything that you want, in the sense you should be able to gift it, sell it, or will it, right? Now, if you had equity shares, you could gift it. All you have to do is transfer it from your demat account to your daughter's demat account. Whereas in case of mutual funds, there was no such thing called transfer of mutual funds. If you had to give it to your daughter or your son, you had to just you had to redeem it and then give it to them. Now, this was creating a lot of problems, including leaving it in a will. Now, suppose there is a father, mother, and two children, and the father held mutual funds worth whatever amount, 1 crore to 10 lakhs, whatever amount. Now, let us say he held it as himself, his wife, and one daughter. For convenience, he had made one daughter the nominee for all the holdings, or they were holding it in three names, because one daughter was a non-resident. He was not, nothing was held in her name. Now, let's say the father dies, and now the mother is a single owner or a joint owner with one daughter. That was not the intention. The intention was to give half to each. Let's say when the father died, the portfolio was worth 1 crore. Now, to transfer it to the other daughter, transferring 50 lakhs, suppose the mother is also dead and the first daughter is now holding the mutual funds worth 1 crore or 2 crores, whatever. If she transferred the half of it to her daughter, which is the father's will, she would have to pay huge capital gains tax, right? Because the shares would be in her name and she is transferring. May not be huge because she had just got it, but she would still have to pay capital gains tax based on the cost of the father's holding, right? What in US is called the step-up cost. In India, you would adjust it for inflation, in the sense that maybe that would be a date would have passed 18 January 2018 January was the cutoff date, right? Grandfathering date or something, and or anyway you would have to pay income tax. Now, the father can create the account, gift away to one daughter and make the other daughter the nominee, right? So these things are possible. This was necessary also to do family settlements and other things, and simple plain gifting, largely restricted to relatives, right? So husband could give to the wife, son could give to mother, and so the only question he was asking is, can I give my non-demat shares? So shares held in a non-demat form, and that's how mutual funds should be held. Dematting mutual funds makes no sense, because it makes it far more complicated to buy more or to redeem, right? So it's a headache, not worth the trouble. So gifting non-demat mutual funds held in physical is possible now with the recent SEBI guidelines, but it is obviously only limited to individual investors, and you have to transfer it to relatives. So a daughter qualifies as a relative, so you can either go to the concerned asset management company or go to CAMS or KFinTech, right? So one of them, all of them will have a process by which you do it. This will be treated as a gift under the tax laws, and since the daughter is a relative, the gift is fully tax exempt and regardless of value. However, if she is a minor, remember, if you are transferring it to your minor daughter, and any gains arising from that will come to you. Now, if your daughter is 14 years of age and you are transferring these mutual funds with a growth option, and she does not touch it for 4 years, and she redeems it at the age of 18 for paying for her engineering college or medical college, then you will not have to pay tax, because by the time she would be a major, right? So if your kids are younger or if they're older, it is still worth transferring the tax burden on to them, because they will not be paying much tax, at least not till the age of 23, 24, by which they complete their education. So But eventually, when she sells the units, capital gains will apply based on the original cost that you paid. So suppose you transfer it to your 14-year-old daughter and she sells it when she's 45, right? Let's say for 30 years also, she also holds it for a very long period of time. She will have to worry about tax at her age of 45. So another 30 years to go. You don't even know what changes could happen in taxation. But right now, instead of paying today, you're going to pay after a much later stage. So what I got from the CAMS and Karvi sites as a process is that procedures will vary from AMC to AMC. So always check with your specific fund house. If you want to do it with Invesco fund or Nippon, go and check with Invesco and Nippon. No point in saying, oh, this is the procedure in some other fund house, right? So no point in talking about that. So first, ensure eligibility and compliance. Confirm from your mutual funds are non-demat form, and again, ETFs would be anyway in your demat account. So if you want to gift ETF, that is also possible. You and your daughter should both be KYC compliant. That is fairly obvious. If your daughter is not KYC compliant, then she will not be eligible for this. Both of you should have verified PAN and Aadhaar and other bank details. So when you go there, make sure that you are carrying your PAN and Aadhaar, your daughter's PAN and Aadhaar also. If she's not already an investor, you will have to do your complete the KYC to open a folio, right? Decide on full or partial transfer. If partial, ensure that the remaining units in your folio meet the scheme's minimum balance. Prepare the required documents. Now, there is nothing which says there has to be a gift deed, but if the amount is too big and substantial, then again, right now it doesn't look like there will be any tax, but make sure that your check out with your chartered accountant or lawyer whether you need a gift deed. Technically, you don't need a gift deed, but if you've got multiple children and you're doing this for one daughter, better to have some kind of documentation. You have to download a transfer request form. I'm sure it's available on all AMC websites, and it's surely available on the CAMS online portal. Identity and address proofs for both parties, example PAN card, Aadhaar card, or if your daughter is already holding a folio in that same fund house, then makes life a little simpler. Proof of relationship will be necessary, so you will need a birth certificate, which might be a requirement of a particular AMC. Some AMC may not want it. Folio details, obviously you will have, or even if you don't have, your PAN number is enough for them to search for your folio details. If your daughter does not have a portfolio there, then you will have to create it. I am still not very clear whether you need a gift deed, but if the amount is big, I think it's better to have a gift deed. Fill out the transfer request form with details like your folio, scheme, units to gift, and your daughter's details as a transferee. Submit it online via the AMC's portal or the registrar, that is CAMS, or for faster processing, you can now mandate the online process should be little faster. If offline is allowed by your AMC, mail it to them or visit a branch with the form and the documents. That might be little faster because somebody might be checking and accepting it immediately, or saying, sir, ye signature reh gaya, you have not completed the documents, that kind of a thing. You will need a 10-day cooling off period with the post transfer, during which your daughter cannot redeem the units if they suspect fraud. So if you transfer it to your daughter, she may not be allowed to retransfer it or redeem it for maybe 10 days or 15 days, depending on fund house to fund house. After that, verify and complete the transfer, which might take 5 to 7 days. Check your updated folio statement, make sure that the correct amounts have been transferred and the balance is still there in your folio, and if the transfer date falls on the dividend record date and all that. But if you're in the growth option, none of that is a issue. The gift itself does not incur tax for either party because it's to a relative. However, gift tax is fully exempt under 56(2) because it's a gift to children regardless of value. Income from units, if the daughter is a minor, then those income from units, whatever dividend or capital gains, will be added to you. So capital gain on sale by the recipient, yes, she will have to pay 12.5% tax at after she holds it for 2 years, or 10% if she holds it for more than 1 year. Sorry, check your current rates. I think it's 15% and 10%. And capital gains above 1.25 lakhs. So that is another advantage. Above 1.25 lakhs, I think she'll pay 12.5%. Anyway, she will not pay surcharge if she's 18 years of age and not earning. So some capital gains, she may not pay any capital gains if her gain is less than 1.25 lakhs. So you can do 1.25 lakhs every year for 3-4 years, or even if you withdraw a little more, she'll pay less tax than you do. So these are the advantages. So if your daughter is a minor, think of setting up a folio with a growth option and not withdrawing till she becomes a major. Thank you.